Obviously not a surprise on the pricing. I think what a lot of people want to know is just how oversubscribed this darn thing is.
Yeah, massively oversubscribed, and the math is static, right? $135 a share, 555.6 million shares, they'll raise $75 billion. What I'm told is that this was Elon Musk and Brett Johnson, the CFO, setting terms, and while the bankers will make a lot of money, they had very little to do with setting the price. It got set pre-roadshow, and it stayed that way. Now, you're exactly right. It's not just oversubscription on the institutional side. We'll work out in the wash what the allocations were. But on the retail side, massive oversubscription up to 100 billion. And so, like, what I'm hearing, the expectation is you will see a crazy open when this starts trading on Friday. But there's every possible and conceivable chance that in the open market, people buy, and then they sell at a high, and you start to see some very different action in the afternoon.
Right. Well, that was going to be my question. I mean, what does this portend for when we finally get to the open of this stock tomorrow here? Because, I mean, you think about this, some of the numbers. I think I saw $100 billion worth of requests from retail. We know that they were going to be allocated 30% of this IPO, which is unusually high. So I hear what you're saying here, that, you know, if you didn't get exactly what you wanted today in your allocations, that, you know, maybe this sets up for quite the fireworks show tomorrow.
You know, on a percentage basis, whether it works out at exactly 30% on the retail allocation, the belief within SpaceX management is that those retail investors understand the story they're trying to sell better than Wall Street does. And that's analogous with Tesla. But their hope is by having such a large, unprecedented retail allocation, that group holds onto the stock for a much longer period of time, and you don't see the panic or the sort of short-termism that might come with that. But also, you know, my understanding in my reporting, the reason they set $135 a share early and left it that way is Musk wanted to take the leverage away from the long-only asset managers who would be willing to bid it up.
So just to be clear here, just to reiterate what we know right now here, $135 a share, Bloomberg reporting, had pegged this at about 556 million shares up for offer, a valuation of just around $1.8 trillion. We're also getting additional headlines from our folks, competitors over at CNBC, that the allocations have yet to be finalized. Of course, this will all be sorted out over the next few hours, and at some point tomorrow during the trading day, this will begin trading. I do want to just kind of draw on a historical narrative here at Ludlow. It was actually about 16 years ago this month, June 29th to be exact, when Elon Musk went down to the Nasdaq stock exchange and rang the opening bell for Tesla's first day of trading. Based on people familiar with the situation, it does not sound like he's going to be at the Nasdaq again, but there are some plans, of course, for him to make a big splash about this. He came to market 16 years ago with a company that made like 1,000 cars a year.
Really
unprofitable, low revenue. He's coming to market with still an unprofitable company, but obviously a much different company in terms of what it can potentially offer. I do wonder, though, there was a lot of potential upside for Tesla, given how small it was, given how much room it had to grow. I look at the SpaceX, and despite its unprofitability, which is more a function of some of the bolt-on things that he put on here, this is a relatively mature company. So how much upside is he offering? What is he promising investors can be?
Yeah, I mean, just on the geography, you know, a lot of people that are important to this company, I can tell you they'll be in Texas tomorrow. They won't be in New York City. Some people will be in New York City. Tesla had
it's going to be 99 degrees here in New York City, so it'll be kind of like Texas.
It's going to be hot either way, if you know what I'm saying. Tesla had a very narrow focus and was a sole niche player in a niche market. Actually, when I pick up the phone today, SpaceX is a much more diversified market than our reporting probably gives them credit for. A diversified player. A lot of people putting a heavy emphasis on the deals they did with Anthropic and Google in the near term to support cash flows, being a neo cloud. And that this orbital data center opportunity, there's a lot of conviction that actually in the prospectus, when they say we'll deploy as early as 2028, a lot of people model for cash flows from that business a lot sooner because it's highly analogous to how Starlink rolled out. If for us, it's hard to understand. Data centers in space, sure. For them, it's just another satellite that does something different.
Yeah, well, it's amazing. I mean, just in the last couple of months, I feel like SpaceX really introduced that phrase into the vernacular. Orbital data centers, and it was kind of a joke at first, but now, I mean, you hear Wall Street saying that with a straight face. I mean, make what you will of the total addressable market figure that SpaceX has dreamed up here, but it seems like that is being treated soberly by a lot of folks on Wall Street.
Yeah, I think the one thing that's amazing about the story is that why are they going public? They need capital. Capital allows you to move quickly. The story we broke last night about them already having IG status at the 3 agencies is a big forebearer of the next thing to happen. They'll come back to the capital markets and raise more money, whether that's through debt or different equity. That's the working assumption here. So this IPO is a moment in time. But basically, most of the asset managers and the institutionals, they see this as a great return on equity. They think they want to see SpaceX raise and deploy capital rapidly.